is Sarah with How to Help Mom, and today we are with
Justin Rush from Nemes Rush Family Wealth Management.
Great. And one of the really cool things about what his company does is they do financial planning, but there's a large focus on what you do in taxes, which is not common to find people who are well versed in both. But what I wanted to do for everybody is to start with some basics first. What is financial planning and why is that so important to our families?
Yeah, so it's a great question, and I think that a lot of times it's tough for people to answer because there's so many different definitions that you see, and depending on who you may be working with or talking to, you may get a lot of different answers. Gotcha. For us, financial planning kind of spans four major areas across tax planning, retirement planning, estate planning, and then investment planning. A lot of people will hear financial planning, they may only think it's just the investment piece, but there's certainly a lot of different components to that. And like you said, we tend to focus quite a bit on the tax elements as well.
Gotcha, and that kind of is important for our seniors. A lot of them are on a fixed income or their income has changed after they were in the workforce. What are some important tax considerations for our seniors?
Yeah, I think there's a lot of things to think about, and I think it may sound cliche, but one of the biggest mistakes that we tend to see is that people just don't have a plan in place at all. You have a lot of folks that they might think about taxes once a year, every April. They don't necessarily think about those during the course of the year, and they're certainly not planning 5 to 10 years or even more into the future. So
Gotcha.
I think a big thing that we try to do is we try to put together those plans where they're going to be looking more in the future, because if you're only thinking about it once a year and you're looking back into the previous year, that's the point where there's not as much you're going to be able to do to really save and minimize on those taxes.
Gotcha. So now that we're kind of past that hectic tax season, are there things that our seniors and their families should be thinking of right now to be putting in place for next year, since it may have been too late for last year?
Yeah, so now that we're done with the deadline and people can take a deep breath, it's a great time to kind of reevaluate where you stand. One of the big things that we're looking at is income projections, depending on where a senior stands and how much they may have to be withdrawing from their IRAs or the other types of income they may be getting for their living expenses. It's a great time to consider, should they be converting some of that money to Roth and maybe prepaying some of those taxes, so to speak, so that it's not going to be paid on down the road. That can help smooth over their tax bill. And not to get too in the weeds, but there's a lot of charitable strategies that you can do as well. For seniors that may be more charitably inclined, there's a lot of things you can look at that will really help you be more efficient when it comes to taxes and getting money to those charities that they're supporting. Gotcha.
And those distributions, a lot of people aren't, I know that there's been some different ages when you've had to start taking those. Has there been any changes in that, or what the age is right now?
Yeah, so there's been quite a few major law changes recently. So the typical age for most people is still going to be 72, where those required distributions from IRAs and 401ks are going to start. But they're starting to phase that out. So for folks that are younger, depending on when you were born, that's going to start getting phased out to 73 and then eventually 75. And in my opinion, it's going to continue to be the case. And the way to look at it is really it's giving people more time before those required distributions start, where they can put together more of a plan. And again, ideally they'd be able to smooth out that tax bill over the long term and be able to minimize their taxes.
Also, all the more reason to actually work with a professional so that you don't think, oh, it's at 71 and now it's at 73 or 75.
Yeah, to share a really quick analogy that I always really enjoy, I had a good friend of mine went to Costa Rica for a vacation. He was telling me about it. He was telling me how he went to go see a national park, but he made the decision to hire a tour guide to help walk with him through the park. And he was telling me how this guy that he had hired, he'd walked through it hundreds of times. While they were going through it, this person knew exactly the right time during the day to take out their binoculars to spot something that he might have seen otherwise, right? He was able to kind of point out some of those opportunities and also those blind spots that, if someone was walking through it on their own, they'd be able to do it, but they may not be able to see those things without being with someone that's already walked that path many times before.
True.
And I've always really liked that analogy for a lot of service providers, financial planning included, to where, myself, my team, we've walked people through this path hundreds, thousands of times to where we're able to identify and kind of see those blind spots and opportunities that someone may not see right away, having not done this before.
Yeah, and it's also super effective to think about, in that analogy, if you're going somewhere, you don't even know what to look at sometimes. So, you get more out of the experience knowing where to look.
Yeah, you don't know what you don't know, and so a lot of times just being able to educate people on some of these opportunities that exist. It's still up to them to walk that path and figure out which direction they want to go in, but if nothing else, being able to educate them on what's available and some of the different things that they can do as they go through this.
So I love that you're talking about education, because typically the people who need us the most are the sandwich generation. So they have to take care of their parents, they have to take care of their kids, and a lot of them also have to balance their own businesses. So for people who are caretakers, who have their own businesses, what are some tax strategies or concerns that they should be thinking of?
Yeah, so there's definitely a lot of tax strategies for seniors to use, but there's even more for those that are self-employed or own their own businesses.
Okay.
A lot of people that are self-employed, especially if they're smaller companies, may not be thinking about things like retirement plans, but if they're able to put some money away, that can be a huge tax savings to be able to actually set up a retirement plan. Even someone who's self-employed and they're just a solo self-employer has the means to set up those retirement plans and get some of those tax savings. Outside of that, there's some basic things that, they might sound obvious, but we run across a lot of folks that aren't doing them, or they're not doing a great job, like things like tracking expenses really carefully, keeping good records. A lot of times people can deduct things on the business side that they just don't realize, whether it's mileage, whether it's home office space. And then on the other side of that, sometimes we run into folks that think they can deduct a little too much, and we certainly don't want people running into trouble with the IRS because they thought they could take deductions for things like entertainment, when in reality a lot of those rules and laws have changed enough to where that's not the case anymore. And there's a lot of deductions that were available 3, 4, 5 years ago, and that's just not the case today. So keeping those good records and making sure you're either working with a really good bookkeeper, or you at least know what to look out for if you're doing it yourself, is definitely super important.
Gotcha. I think another important thing for our caregivers is, okay, a lot of times they feel like, well, I'm planning my stuff, or I'm dealing with my parents' stuff. Nobody taught us how to do this. What are some tips or things that they should be teaching their kids?
Yeah, I think, and that's a big problem that we tend to run into, is there's really not a lot of education that people get on topics like personal finance or taxes or estate planning. So I think one of the big focuses that we have, like you said, is that education piece. So I think it's important that you're working with someone that'll take the time to educate you on a lot of these things and make sure that you understand the different elements that go into a tax plan, an estate plan, and retirement plan. And then being able to pass that along to your own children and explain that. Or even a lot of times we work with multi-generational clients to where we're working with their children or with their grandchildren, to where actually bringing them into the room and having those conversations with them can also be super helpful.
One of the things that we've been talking about is stress reduction, and I know that estate planning does that. How does that factor into really relieving stress on all of the generations of the family?
Yeah, it's certainly not an easy topic for people to talk about. No one wants to think about, the days when they're no longer going to be here, but it's certainly a very important thing for people to have those conversations and talk about really those scenarios that, you don't want to not have a plan if something terrible were to happen, if there were to be an accident or something unexpected were to happen. You want to make sure that you have something in place. And so, and on this topic, estate planning, a lot of people think of wills and trusts and powers of attorney, but even things like making sure your beneficiaries on your IRAs and retirement plans are up to date is a great example of you're still doing estate planning. It may not be the type of estate planning that people typically think about,
right?
But it's very important to review those kinds of things at least once a year, if not more. 10, 20 years ago, it might be more common to have you have a spouse, you might have some kids. I think today you see more and more mixed families. You have more and more people that have multiple marriages. They may have kids from multiple marriages. A lot of people don't realize that your IRA beneficiaries actually supersede anything that's in your will and last testament. So a lot of people,
I had no idea.
they might get their will and last testament done, they might set up a trust, and they think, I'm all set, I don't have to worry about my beneficiaries anymore because my will supersede any of that. That's actually not the case. So every once in a while we'll review someone's 401k or their IRAs, and they may have a beneficiary on there that's 2, 3, 4 years old. It could be an ex-spouse, it could be someone that is just not up to date, and people don't realize that if they were to pass away or something were to happen, those people would get those assets even if their will and last testament said something otherwise.
Or maybe they had another child after they made those plans, and
Exactly.
then all of a sudden the oldest one.
And
I mean, I'd be fine with it. I'm the oldest child, but.
And things change, family situations change, and so it's just not always something that people think of to do every year or very often, but it's certainly very important. And that's before we get into things like trust strategies or having the proper powers of attorney in place so that you have someone there that can make decisions either financially or medically in the case that you're not able to do that yourself.
So one of the stress relievers we've been talking about is estate planning, and having a trust can reduce a lot of stress, but what a lot of people don't do, I've learned, is that they don't actually fully finish funding their trust. Can you explain what that means so that people aren't getting a trust and then feeling like, okay, everything's fine?
Yeah, and we see this quite a bit. What funding the trust really means is really just retitling assets in the name of the trust. So whether it's a joint investment account or bank account, whether it's retitling property in the name of the trust, that's what people mean when they say funding a trust. And a lot of people don't do that. A lot of people will set everything up, and it's the equivalent of getting 95% of the way there. You get right to the finish line, but you don't take that last step over it to kind of complete the race.
So we've talked about the trust and the funding things. Is the trust the way to go for everybody? Does everybody need a trust?
So we certainly get a lot of folks that think that I need a trust because it's part of my estate plan, or my neighbor has a trust. They kind of just think that that's part of something that they need to be doing. In reality, there's many different types of trusts that you can set up, and people need to understand what these trusts are doing for them. And trusts, like a lot of other things in the finance and estate planning space, are just a tool to help solve problems that people have. And so people need to really understand why they're setting up a trust. It's not a one size fits all. Everyone certainly doesn't need to have one just to have one. People need to make sure they're being educated on what this trust is providing, the different types of trusts that exists. We have a lot of clients that set up trusts for younger children with spendthrift provisions that don't allow them to spend money outside of certain expenses. Just as one example of, again, it's just a tool for people to help solve some of the financial problems that they're running into and try to get to certain outcomes.
Speaking of financial problems and certain outcomes, a lot of our families struggle with when should and how much should they be saving for retirement, and when and how much should they be saving for kids to go to college. Are there any strategies or tips that you find common to be helpful for this situation?
It's definitely a tough question to answer. I think as we work with people, as we go through these kinds of conversations, again, we take a lot more of an educational approach.
Gotcha.
To where it's not our decision to make on where people are reallocating their funds, whether it's retirement, whether it's saving for children's college, whether it's having fun today, going on trips and traveling. I think for us, the big thing is just really showing people these different trade-offs and how they may impact the plan that they've put together.
Gotcha.
And then from there, it gives people a lot more of an informed mindset to go ahead and make those decisions. So we work with some folks that they don't want to sacrifice their own retirement to help save for their kids' college, and we have some folks where saving for their children's college is their number one priority above everything else. So as far as we're concerned, it's not something that it's not our decision to make for them, but anything we can do to help inform them and help them understand those trade-offs that they're making.
Gotcha.
Just so they're aware of that as they kind of go through this and put these plans together and then go ahead and actually execute these plans.
What about executing plans for debt? Is there some debt that's better than other debt?
Even that is a pretty personal thing for different people. There's some different strategies that people can use when it comes to debt. Depending on someone's mindset, depending on how they work best. The two main ones, the first one would be more of a snowball technique, where sometimes people will aim to pay off their smallest balance first. Kind of gives them more of a little win to help them piggyback off of that, and then give them a little more motivation to continue paying off the rest of their debts. Some people take more of an analytical and mathematical approach where they may pay off the debt with the highest interest first, kind of giving them more savings over the long term. But really, the best plan is going to be something that someone can stick to. And for different people,
Gotcha.
starting small and building up might work better. For some folks, kind of tackling that biggest one first might be a better solution for them.
What are some of the kinds of debts that you find people who want to pay it off, like the harder ones to pay off or the higher interest ones that people maybe don't realize, oh, like that is actually a high interest debt comparatively?
Yeah, obviously credit cards, I don't know if that would be sneaking up on anyone, but credit card debt's a big one that people have that's going to be very high interest paying. I think student loan payments as well, especially seeing that since COVID they put that pause on paying off those student loans. A lot of people took advantage of that, as they should have. But that's going to be something that's going to be more and more applicable going forward as those pauses start to stop and those payments start coming back into people's lives. And then getting into more nuanced situations where, especially when you're looking at like the medical field.
Ooh, you had me at medical, because I used to be a teacher, so we had certain programs like this. But can you explain to some folks why it might be different for medical folks or certain industries in their planning on how they handle their debt?
Yeah, so for those that don't know, if you work in a public sector for 10 years, you can be eligible to get some of that debt or all of that debt forgiven. And that plays a big role, especially as people are looking to potentially refinance some of their student loans. So if you go and you refinance your debt and you're using a private provider, you're no longer going to be eligible for that kind of loan forgiveness. So depending on someone's career track, how far into it, what they want to do over the next 5 to 10 years, it can be a pretty big decision to figure out, one, whether they want to refinance some of their debt and whether they want to continue down their current career trajectory, depending on how close they may be to getting some of that forgiveness for their loans.
And if it's me, I find all of the little qualifiers that they have super confusing. So I would definitely want to make sure I was having conversations with a financial professional and just make sure, all right, anytime you get a product offered to you, if you're going to refinance something, even teach, and we talked about teaching your children about money, don't do anything until you speak to an expert who can tell you, oh, well, you might refinance yourself out of a benefit. A lot of people don't realize that, and that's unbelievably a huge expense if you make that mistake. So I wish there weren't those kind of predatory things out there.
Yeah, and again, it goes back to a lot of people just don't know what they don't know. A lot of people will refinance some of their student loan debt without even realizing they've lost that ability to work in that public sector for 10 years and then get that forgiven. And it's not a very fun thing to realize down the road if you've been working 5 to 7 years in kind of a public sector with that expectation, not realizing that that's no longer on the table because you refinanced your student loans 3 or 4 years ago.
So you brought up something that has affected everybody. The pandemic shifted a lot of things for people, and where they were working, how they were working, what they thought about living their life. And a lot of people are like, oh, well, I've only got one shot at this. And a lot of our caretakers are also stressful. I've only got one shot at living, but I also want to be able to take care of my parents for worst case scenario. So what are some things that you saw really shift kind of during the pandemic, and how people can still do those YOLOs and taking care of their folks kind of stuff?
Yeah, it was certainly a huge shift. I mean, it goes without saying that it was a huge event in all of our lives. And I think what we saw a lot of, especially from a financial standpoint, is that we saw a lot of people reorient the goals and priorities that they had in their life. We had a lot of people who worked 50, 60-hour weeks that got to spend a lot more time with their family, and they kind of realized that that's what they want to prioritize going forward. And we saw a lot of people readjusting some of the plans that they had to where maybe they didn't want to work quite as long, maybe they wanted to cut back on hours, maybe they were willing to cut back on things like retirement spending in order to make that trade-off to spend more time with their families. And so, again, I think it just goes to show that, these plans that we make for people, financial plans that people have, aren't meant to be prescriptions. They're not
Gotcha.
meant to be something that's restricting people from doing the things that they want to do with their life.
Okay.
The financial plan or any sort of retirement plan that you're putting together should be something that's reflective of how you want to be living, for the priorities that you have. And obviously, COVID was a great example of how that can change very quickly. And we had a lot of people that, again, they had an opportunity to reassess where they were and some of the priorities that they had. And they went ahead and they switched a lot of those things up to really realign better with how they were feeling today and how they wanted to kind of live their life going forward.
So which is awesome, because I love that people, took that opportunity to reflect. There's also a lot of people who have a lot of anxiety about the 2008 crash and what, I can't do any of this stuff because we've lived through some pretty major events. Is there anything that you do to either plan for those things or combat those fears, or to change strategy as you go? What's your guys' policy on that?
Definitely. I mean, I think there's a lot of reasons for people to be concerned right now. We're seeing a couple of banks go belly up. I think a lot of people are getting shades of 2007 and 2008, and there's still a lot of people that have very deep scars from going through that period of time. And so I can't speak for how other firms do planning or how they do retirement planning, but for us specifically, we specifically run a scenario called the bad timing scenario, whereas if someone were to retire and then experience a market environment similar to 2007, 2008, we want to be able to simulate and run those models to see how they would fare in that, quote, worst case environment that we would see. And so we've found that gives people a lot of peace of mind to know that if they were to retire and their portfolio were to be cut in half on the first year of their retirement, are they still going to be okay? And so being able to really show people the math and the numbers behind a scenario like that can really help ease their mind and give them a lot more peace of mind when it comes to a lot of things that are going on in today's world.
So it sounds like you have something for everything. We've got something for taxes, if you want to YOLO, if you want to save and save and save until the end, estate plans. Is there anything that we haven't talked about yet that sticks out as something that people should also keep in mind?
I think that, like we've been saying a little bit, a lot of it just comes in the form of trade-offs. I mean, again, I think a lot of our role is really just educating people on a lot of these different scenarios and what if we do this versus what if we do that? And it's up to them to figure out which path they want to walk. It's up to them to make those trade-offs and figure out what works best for them, for their families, for their spouse. And for us, it's really just about showing them those different paths. And then as they go through that, that's when we can be there to spot those opportunities that we talked about. Opportunities in the tax space to save them money on taxes, opportunities in the estate planning space to make sure that they're not making any mistakes there. And really just being able to be there and help guide them as they go through this plan. And then, again, it sounds cliche, but as soon as someone walks out the door, the plan is probably already incorrect. Things change, life changes, the environment we're in changes, and people need to be able to adapt to that and continually revisit these conversations to make sure that, like I said, this plan is a good reflection of where they're at and where they want to go. These plans are never meant to be a restrictive thing where people need to feel bad or guilty that they may be spending too much money or not saving enough. We want to be able to show them the effects of their decisions, but it's up to them on which decisions they want to make. And if some people want to spend more of it now to enjoy it, I'm certainly not going to be there to tell them not to do that. Again, it's up to them. Some people want to save more and have more maybe 10 or 20 years from now, but again, it's totally their decision.
So what is the best way for people to get in touch with you to start having these conversations and start being able to plan their specific for right now and forever plans?
I think for us, again, like we've talked about a lot, our big focus is education. So when we are working with someone new, the first thing that we're going to do is we're going to work with them to develop a draft of a plan. We're going to sit down with them for 2 to 3 meetings to get that put together, get a draft, give them a sense of what we work and how we work, along with how they work. And from there, we can really start to see if it might be a good fit moving forward. I'm personally not a big fan of the, here's what's behind the curtain, but we're not going to show you until you sign up. We're big fans of kind of giving it all away up front. And if it turns out to be a good fit, then great. And if not, then certainly no hard feelings. And we wish people the best if they want to go in a different direction. But we're more than happy to sit down with folks, have a conversation, start that process of putting a plan together as we kind of feel out if it might be a good fit.
Perfect. Okay. So I love that there's an opportunity for people to meet with you to figure out if you guys are the right fit or not, because it's important for us at How to Help Mom that people are getting set up with the right people, the right time, the right space. What is your contact information for them to be able to set something up with you?
So folks can reach out to me directly via phone at 248-756-3268, or they're more than welcome to send me an email at justin.rush@nemesrush.com, nemesrush.com. And they can always check out our website, nemesrush.com, and reach out to our office or reach out via the website as well.
Perfect. And if you guys don't remember that, always remember that if you reach out to us at howtohelpmom.com, we can get you in touch with him too. Thanks so much.
Thank you.